You see, when trading the wheel option strategy, you only want to trade options on stocks that you want to own, because otherwise you could be stuck in a very bad position. But how exactly do you research stocks for options trading? Which websites do you use to check for news on the underlying stock that you want to choose for trading the wheel? Should you choose Yahoo Finance or Seeking Alpha or MarketWatch Benzinga? Well, how can you know whether you should trade the stock or not? And that's exactly what we're going to talk about in this video. All right, so I want to also give you 4 very specific examples from stocks that popped up on the wheel scanner today, so that you know exactly of what's happening. But first of all, let me show you, especially when you're trading the wheel strategy. I mean, you're pretty sure that you have heard about this. That's a trading strategy that I use to trade my own accounts, and we'll talk about my positions here in just a moment. So I'm trading the wheel strategy, and the important thing is that you only want to trade this on stocks that you do want to own. And in fact, one of my team members did this meme. Rule number 1 of the Wheel Club: don't sell puts on stocks you don't want to own. Courtesy of Photoshop, there I am on Brad Pitt's body. Anyhow, so let's talk about this. Let's actually take a look at a few stocks that came up on the scanner today. The first one that I want to show you is Hood. So here we go. Here we see the wheel scanner, and we see that Hood, Robinhood, came up today with various strike prices at which you could sell puts. So for example, a strike price of 37, and you see that actually doesn't look too bad if you look at the chart, right? So the key question is, do you want to own Robinhood? And here is what I like to do. So where do you check if there are any news that could be affecting Robinhood? So let me show you what I like to do, and we're jumping back here onto Safari. The absolute easiest way is the good old trusted Google. So here's what I like to do. All I type in is Hood stock. And after I type in Hood stock, this is where we're going to news. You see all of the news, different outlets. So you see Investors Business Daily, you'll see The Motley Fool, you see Yahoo Finance, The Motley Fool, CNBC. You get an idea of what is happening here right now. And you see, for example, there's an article from CNBC that says Robinhood tanks after the SEC chair tells Barron's that it is payment for order flow, banning payment for order flow. So that is a possibility. This is where it is super important when you're trading a stock like this. And Robinhood, the brokerage, as you know, is heavily relying on payment for order flow. So what do you think will happen when it is banned and there's no more source of revenue for this? I mean, that's obviously not good for the stock. So this is why it is important, instead of just looking at the chart, that you also check the news. You see, there's a few other news that say exactly the same thing. So Motley Fool also says, could Robinhood lose its main source of revenue? And therefore, you pretty much already know, stay away from this stock. See if it is still popping up on the wheel scanner. It sure is right now. It sure is. And you see, just looking at this and at the chart is not enough. You need to check some underlying news. So let me give you a few more examples of stocks that popped up today. So NVEX, for example. So NVEX popped up on the scanner, and as you can see, oh my gosh, there is a lot of premium here available. So why is this? What is it about NVEX that gives us a lot of premium? I mean, look at these strike prices here. This is a daily chart. And if you're looking at the strike price, we're looking at strike prices of around 200. So as you can see, the drop in percent right now, this could drop 14% and you would still collect a lot of premium. So you have to wonder, what is happening here? Why is there so much premium left? Do you really want to own the stock even at a strike price of 200? And again, we're going back to our good old trusted Google, and all we need to do here is type in NVEX stock. See, if you have been following me for a while, then you probably have heard me talking about NVEX here for quite a while because NVEX is also developing a COVID vaccine. But I mean, they haven't been approved yet. And there's other vaccines that have been approved. The other vaccines did not only get emergency approval or authorization, they got full approval. And NVEX here apparently late to the game. So let's take a look at this, and you will basically see, okay, Novavax will enter, investor plays things that will enter the COVID vaccine race with a bang. I'm not so sure. I mean, if you're late to the party here, right? I mean, this is why it is slipping again today, and you get the idea here. So if, see, Novavax is a steal, if you believe it will come through. But will it come through? You see, for me personally, this is too much as a gamble. And you see that other options traders are thinking the exact same thing, and this is why there is so much premium. Now, let me just give you two more examples that popped up here today as well. So the next example is support.com. Let me just see if it is still on the scanner here. It sure is. It sure is. So here is a warning sign. Whenever you see that this is lighting up like a Christmas tree here, and you see all of this is orange. What does orange mean? Orange is a warning when it pops up on the scanner. And hey, by the way, if you're absolutely new to this channel and you have no clue what the wheel trading strategy is or what this scanner is that I'm using here, I'll link to it in the description, and also at the end of the video. I'll see if I even can link a card somewhere here at the top, I believe, right? So that you can click on this and get more information about this. But here you get the idea. It is a warning sign, and you see also the drop in percent. I mean, this thing could drop another 53%. I mean, here we're looking at strike prices of 9 or 8. And you see, this is where often I see that traders are getting blinded by these high premiums, and they say, oh my gosh, I can make so much money with this stock. Then they're getting blinded by the premium and they're getting stuck with the stock. So let's see, why is actually support.com providing so much premium? So, and again, this is where our good old trusted Google will help us out, and all we need to do is SPRT stock. All you need to do there, go to news. That's super important. Go to news. This is how you find out what is happening here. And then you see that, okay, there's apparently a merger happening. So what does this mean? There's a Greenwich Holdings, okay, they announce an update on merger closing. You see, it's really interesting. This Greenwich Generation Holdings is a crypto company. So you might be wondering, why do they want to merge, and what's happening there? And this is where big warning signs. You see, some mergers, they're obvious. Some mergers make a lot of sense. This here, to me, does not make sense. And you see, you don't really have to do a lot of research. So why should you actually go to very specific sites if Google pretty much tells you the whole story already? So let's do one more example. So let's actually take a look at KWeb. Let's see if this is still on the scanner. This popped up earlier here as well. So KWeb is Crane Share Trust's China Internet. Let's see, a few orange here. So orange is already telling us warning sign, and this is a China Internet ETF. Now, I don't know about you. If you're watching my stock market update, then you know of what is going on in China. Well, actually, let's take a look at this. Let's go to our good old trusted Google and type in investing in China stocks and see what comes up there. Okay, so okay, not good. Should I buy Chinese stocks? They're being regulated, right? And you might have heard it. It's actually crazy of what has been going on there. Let me show you a few charts, and then you get a better idea of why you should stay away from them. Let's start with an education company, and I want to get rid of my volume here that seems to be a little bit distracting. So a Chinese education company is EDU, New Oriental Education Group. a while back, the Chinese government said, you know what, all education companies should actually become non-profit companies right here. And this stock plummeted from $7 to right now trading at $2, with basically no hope of recovery at all. So stay away from Chinese stocks. A few other ones that we can take a quick look at. Alibaba, right? So let's go there. Baba. So today down now 2%, and this is after China basically said, you know what, we're breaking up Alipay, or we're thinking about it. Alibaba has 30% share or a third stake in Baba here. So you get the idea, right? You don't want to do this. Another one, Tencent. So TME also tanked after the Chinese government basically said that they will limit online games. So anyhow, where do we go with this? The idea here is, when you research stocks, which are the best websites? And for me, the best website is Google News, because Google News aggregates all of the news websites. And here's the good thing about Google News. Google ranks authority sites the highest. So this way you can be sure that you're not falling for any of the scam sites that are trying to hype up stocks. So usually, as you can see, you see something like Barron's there, the New York Times, you see CNBC. So usually very, very reputable resources. Anyhow, so that's what I wanted to cover today, of how exactly, there we go, how exactly do you research stocks for the wheel? Hope that this helps.